Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in today's free video I wanted to take a look at a trio of tickers with you. 3 different names that I think will give you various opportunities into Thursday. Now, I'm not necessarily suggesting that you would need to take all 3 of these, but the way that I look at it, and there's 3 that I want to look at, how can I compare each of them and then try to decide where it may be best to place the trade for what I'm expecting this week. So the 3 that I want to take a look at are Netflix, Facebook, and the third, of course we couldn't do a free video without talking about Google. So these are the 3 that I want to look at today, and you may say, okay, why did you decide to pick those 3? And the general reason is because over the course of the next 2 days, essentially Tuesday and Wednesday, and then into Thursday morning, I think you can count as well. That's really where I would be looking to exit the trade. So it's the idea that you hold it Tuesday, Wednesday, and exit on Thursday. In that regard, each of those tickers has a pretty decent range. For Google, you can see we're trading 650. Obviously right in between 7 and 600. For Facebook, from a swing perspective, I do still like it to the long side, but it's had a hard time getting up through about 92.5 there, and just noticing it this being a little bit more range bound. And then of course Netflix, that has come down into 95, another key zone in relation to how it's traded here before. Not to mention the fact that you're also kind of wedged right here against the 100-day moving average, and you found support at a fire line at 95. So those are the reasons that I generally see the 3 of those being range bound. And an easy tool to help you determine which one of those to use can be found here in the Thinkorswim option statistics. So what I'm looking to, and what I like to look to anytime I place a trade like this, is what is my IV percentile. What this is telling me is where does the implied volatility for this particular underlying stand in relation to where it has been for the past 52 weeks. I like to break it down into thirds, and when I see that Netflix is trading at 74, okay, that's the upper third of what it may be trading at. Then we take a look over to Google, where it's sitting at 65, okay, so it's about, 9 points lower. And then a third of which here with Facebook, trading at 44. So if I think, okay, I know, or at least I assume, that action is going to be sideways for the next 2 days, I really don't want to take any type of directional exposure, but instead would like to focus on selling some premium. Well, the easy choice as far as that is concerned is Netflix, because it has the highest premium of the 3 we've looked at. Now once I land myself with that decision, I think this is a great place to go to, because the fire line has been so pivotal. The other thing that I like about strategies like this is that if I'm completely wrong, my risk is still very well defined, and I think that's important in a market like this. If we drop down the options chains for Netflix, you'll also notice that you have nice standout open interest here at the 95 call strike and also on the 95 put strike. So the idea with this trade would be something very similar to this, where we would sell technically an iron butterfly, but you can configure it from the iron condor dropout and look to sell the 95 calls, buy the 100s, then sell the 95 puts and buy the 90s. Granted, right this second is not the best place to put it on. I would prefer putting it on when it's exactly at 95. That way you're balancing the credit received through the calls and the puts. Also, if you want to get crafty with it, you can try to put the short calls on while the stock is up, and then sell the short puts when the stock is down. But ultimately, this is one of the best ways to take advantage of sideways trade around 95. If I did end up taking a $3.50 credit for it, the most I could lose is $1.50. So I like putting myself in those good risk-reward situations when I'm dealing with what could be an interesting week. If we can trade sideways into Thursday, that should decay very nicely, and those are just a couple of different things to think about as you start making your decisions for this week's trading. So one other thing I want to make sure you guys were aware of is that John will be teaching a class here in the next couple of weeks. On Tuesday afternoon, he's going to be giving a free webinar to kind of talk to you about it. So this webinar is going to be September 15th at 8 p.m. Eastern Time. You can get a glimpse of a couple of the topics he's going to be carrying there. Overall, it's just how he's been working with his account for the past 8 months, and I think you guys will find it very helpful. So after this video, you'll have a chance to sign up, and I hope to see you there.